Hello, everyone. This is Teddy Keckstead from Forex Trading Unlocked, and we are here with a market analysis for the following week of October 3rd through the 8th of October. And we have our disclaimer up real quick just to remind you that this webinar is for illustrative and educational purposes only. We had a little stream problem earlier, and hopefully now it is coming back. Thanks to you guys on the chat for pointing that out. Let's see, just to remind any of the new people that are here on YouTube and Twitch checking things out, please, if you have not done so, subscribe to our Forex Trading Unlocked YouTube channel and Twitch channel, and check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. By the way, this soon will be available in hardcover version as well. We're getting the first edited copy of it this week. All right, so let's go to our live action scene. Can see it now. All right, Greg Dog, appreciate it. Totally appreciate it that you guys can see things. All right, so real quick for anybody else that's new, we're going to just give you a real quick rundown as to why the dollar is under pressure and what's going on in the marketplace. The things that you need to watch out for. Remember, the best indicators of any market movement is always the market itself, and it's not a lagging thing. So something that's not lagging is something that's going on with the interest rates. Remember, interest rates are a function of currency pricing. As interest rates are going lower right now, with the projected bounce up, like I was talking about earlier, of about 3 to 4 handles, basis handles in the bond futures, and probably about 2.5 to 3 in the 10-year note futures. As the market goes higher for interest rate futures, rates go lower. So that would be something that would weigh on the dollar in the short run. Crude oil is also at the $75 level, pushing that 80-something dollar level. That's something that you have to be very mindful of. We're looking for it to go to 100. This will start to impact especially transportations and all kinds of other stocks and stuff like that in the broad marketplace. All right. Then lastly, we have the gold market here. This is something you have to be really mindful of too. If interest rates continue to turn in the way they are doing and they start to soften for a little bit, meaning go down, market prices going up, and gold also continues to maintain a bullish tone for the next week or two, that would put some pressure on the dollar as well. Because right now the dollar has been beating up most markets. Interestingly enough, with what's going on, we have the interest rates that are turning. We have some signals in the currencies, which we're going to get to now. And then we're also going to get to some crypto stuff as well. But in the gold, we did have a bullish engulfing line buy signal on Thursday of last week, with a little follow through on Friday. Okay, so our target zone is up here around the 1796 to 1825 area. You have the long-term bearish trend that is intact, that should we get into this area, we should find a lot of resistance. I'm not expecting a lot of follow through. And this would be a good little blow-off area for right now for a little profit taking against the dollar. Have these markets have a little reverse action versus the dollar, and then trend for a little bit for the next week or so, 2 weeks. Get up into these levels and then spin off and see either go through them and continue higher or lower depending on which market we're talking about, or come into these target areas and then turn around, which would then bring back the dollar bulls. All right, so let's get back to what we really want to get into here. We got the Forex-Trading-Unlocked.com website already pulled up. From the navigation tab, we already have the workstation page also pulled up. Now we have, as far as numbers, what's going on here. All right, we don't want to talk about the COVID-19 cases and stuff for the EU and what have you. It's out coming out today. Tomorrow is CPI for the Swiss franc. There is a little move going on with the Swiss, so we're going to take a look at that today. We have the durable goods coming out for the United States. That is a big bond number, believe it or not. That could have an impact, obviously, if it continues to foster a rally in the 10-year and the 30-year, then odds are the dollar is going to continue to be under pressure. Okay, now let's also look at CPI for Tokyo for the Japanese yen. That's going to be another number that comes out tomorrow as well. Then we have, what is it, on the 5th, we have PMI for the this for Germany, so that'll be big for the EU. Then we have PMI for the EU. That's a big thing, so those combined PMI numbers, they will probably be pretty much in line. PMI for the UK also is another number to be watching out for on the 5th. Then we have our PMI as well for the United States coming out in the morning. And then let's go to October 6th. We have consumer goods for Germany. So for the EU, for the euro, that's going to be a little bit. Retail sales for the euro, that's another one, and we have some things to talk about in the euro. We're going to get to that in just a moment. Almost through the numbers you have to pay attention to. October 7th, we have an leading indicator for the yen, maybe a little bit something. Industrial production for Germany definitely is a big number that could influence the euro. And then let's get to initial jobless claims, 7:30 on Thursday. That is a big number that's going to be going on Thursday, believe me. Let's see, right now, initial jobless claims. Prior was 362. Yeah, they're going to forecast lower. They've been forecasting lower jobless claims for 3 weeks, and they've been going higher. Guess what? They're going to continue to go higher, especially with all the new mandates. I mean, just the bus drivers and other places around, and even for restaurants and bars, they can't go back. Now they're not going back to work because they're not getting vaccinated. So it doesn't matter if their taxes are running out or not. Now they're just going to be like, okay, well, now I'm going to go do something else, or not. Who knows? So October 8th, Friday, then comes the big one right here. We have non-farm payrolls and unemployment rate for the U.S. dollar. It was last prior at 235,000, forecast 460,000 as far as an increase, or a decrease rather. I think this is not going to happen. It is possible because of the summer numbers and the lagging issue with unemployment that this may not go the way the claims have been going. It may take one more month, but should this number be on forecast or even better, it's a spike before it really goes the opposite way. As far as the unemployment rate, prior 5.2%, this number is totally understated, that's for sure. Forecast 5.1%, this is impossible when we have almost 10 million jobs that need to be filled. Okay, so let's get to the bread and butter here. We have the dollar index, which as of Friday has settled with a 3 inside down sell signal. Okay, so we have trend of the U.S. dollar index has been higher, meaning that as a whole the dollar has been trending stronger versus most of the world currencies. We had a blow off top over the past few days, a few sessions, Thursday and Friday, where it spiked high and now set a harami top, short-term pause for the cause, and now we have the 3 inside down sell signal here that confirmed a short-term turn of events for the dollar index. So now are we going to get a slide in the dollar index that takes out this upward sloping support line right here, or are we going to, and then possibly get down to our target area down here? Who knows? Anything could happen, but I don't believe it's going to be that severe. Should we have a major sell-off, this is our target area of support and strength, where I think that no matter what, should we have this vicious of a slide, this would be as far as we can go. So, but I think the only way we get this is if we have some serious issues with the unemployment number and the other numbers that I mentioned going into the week, which very well could happen. So let's go to the Euro-US dollar, the number one component of the dollar index. All right, so this one has been trending lower and lower and lower. So should the dollar index turn and the euro has some chance of getting at least a little relief here as far as any upside potential here, and I would say don't try and catch a falling knife. This market's been making lower move lows, lower move highs. We can look on the hourly basis. Maybe it's basing, looking for an hourly setup and a little bit of a correction higher. Even if we were to get a rally from this area of $1.1592 where we're at right now from Friday's settlement back up to this $1.1930 up to almost $1.20 even, this would be the extreme for any rally for the Euro-US dollar. Unless oil prices really come down and there's a surging economy moving forward for the EU as a whole, I believe that this is definitely the buffering zone of any extended forecast to the upside. So if you want to take a low-risk buy here, potentially buying it against the lows set over the past couple sessions, or maybe as we open up into today, I guess you could, it's a lottery ticket, but you never know. If the dollar index is really turning, this is probably a good chance to get in at a good pricing point. But as far as are we going to get all the way up to $1.19, I don't think that's going to happen. I think we're going to most likely run out of gas somewhere between this 117 and 117.5. So this downward sloping resistance line, I'm pretty sure is going to contain and cap any rally that we have going on so far. All right, let's look at the British pound US dollar. This is interesting here. we have a 3 inside up buy formation here. This right here is a high probable Japanese candlestick pattern. You can read about it in the book, High Probable Japanese Candlestick Patterns, by the way, and how to trade it. So, but one thing you can count on right now is that this market has been trending lower, and we're looking for it to come rally up right into this downward sloping resistance as our initial target area. If the dollar index, like I said, is only in a corrective phase right now, it's very likely that you'll see the pound, especially with the rallying oil, get up into this area. The fact that interest rates on the market side, not the Fed side, are starting to pull back a little bit, for which hurts the US dollar. This also gives strength and credence to a potential stronger bounce for the British pound US dollar. Does that mean we're becoming a big bull for the pound US dollar? Absolutely not. For transparency's sake, though, am I long the pound US dollar? We are long the pound US dollar. We have been for the past 2 days, since Thursday. So, but we are not looking for a major move. We're looking to get out of it somewhere between $1.37 and $1.38 even, depending on how the next couple days unfold, and especially how the market opens up today. So right now, if you are an aggressive bull, I would use the recent swing low, because anything below here cancels this 3 inside up buy signal and confirms a continuation of what is already now a bearish trend. Remember, right now we're talking about counter trend signals. These are lower probability trades than they are when, hey, Raptor Mano, how you doing? So, in fact, I don't know if everybody can hear me and see me. If you guys have any questions about any markets, leave it in the chat box, and I will get to it as we get through the analysis today. All right. So, and also don't forget to, if you can, share and like the live broadcast or the video when it's done. And also you can post links or questions in the comment section on either the YouTube or even on the Twitch area. So, which would all be greatly appreciated if you don't mind. So, all right, cool. So now let's get back to the GBP USD. All right, so we got through this little signal here. This kind of coincides once again with their scenarios of the interest rates getting their little bounce, meaning rates going down, pricing going up, gold getting a bounce with that buy signal. Remember, there's another one. So when you have a confluence of multiple markets, typically when you have all these signals lining up, not necessarily that they're all the same, 3 inside up or 3 inside down or whatever, but the fact that you do have coinciding reverses of trends with especially like high probable Japanese candlestick patterns of various ones occurring simultaneously or within a very short time frame, which then set up these trends. This puts up a very good scenario for a counter trend trade. So normally, if this was just the British pound US dollar, but everything else was just really getting slammed by the dollar and what have you, then you would have to look at it as maybe there's some sort of issue between the pound and also euro and AUD analysis. Yes, we will get to the, oh, you want to do the euro AUD? Yes, I can check that one out for you. So anyhow, yes, so that gives us an idea when you say, like, for instance, if the dollar once again was beating up everything, and you have a, excuse me, a signal for this one here, you would not necessarily take the trade, or you would use much more caution as far as how you would be trading it and as far as your expectations as well. All right, so we have that turn there. Now let's look at the last European component. And gold, please. All right, Raptor Mano. Okay, we will go back to, before we get into the US dollar Swiss, since we have some additions here, gold is something that we talked about. We have a bullish engulfing line buy signal, which is helping to drive the price of the dollar down as we head towards this target area of 1796 to 1825. And you'll see this as we get into the Swiss franc now as well. So what do we have here? Well, we have a little bit of a short-term top that is forming here in the US dollar Swiss. Obviously, the market's been making higher move swing highs and higher swing move lows. But if the dollar is in a short-term corrective pattern, odds are US dollar Swiss will start to slide. Now, the fact that gold is also going up as well, that also helps to confirm that this top that was set on Thursday in the US dollar Swiss is a good selling point again. So a low risk sell right now is risking a little bit above the high from Thursday and looking for a breakdown towards this 91.46 area, which comes right into this upward sloping support line right here. Okay, so we don't have a signal per se like we did have with the pound and with gold and a couple other markets that we've mentioned so far, but we do have this confluence where the other markets are starting to come off versus the dollar. We spiked high. We have two negative sessions, so we'll see how things go today. If we have a follow through on Sunday evening into Monday, I would think that, especially because we do have that one Swiss number coming out tomorrow, that the US dollar Swiss is probably going to continue at least unwinding to the downside and testing support probably at least until the market opens in the United States around 8:30 Chicago time, which is Central Standard Time, 9:30 Eastern Time. All right, US dollar JPY, this is another one where we had a bearish engulfing line sell signal on Thursday. So this is a big deal. So the fact that this thing here is also lining up, coinciding with all these other signals, helps to reinforce once again that even though the trend right now for the dollar is up, even though the trend for the US dollar JPY for sure is up, we have a long-term buy signal right now of 113.5 to 114 even within the next month and a half to 2 months, and we have 116 even before the end of the year, definitely by early January. So at least as far as longer term trend. However, the US dollar yen has a way of slinking along and just continuing to make higher move highs and higher move lows, but it goes sideways for months. It barely takes out the high. Then it'll come and find support somewhere like around where our target area is here and probably maintain the trend higher. One of the things that is supporting this one versus many of the other currencies is that as long as oil, as we spoke about, continues to make higher move highs and trend higher, and as long as the interest rates, this one is right now helping the US dollar yen fall back. If these interest rates turn, and especially with higher price of oil, then you can bet dollars to donuts that most likely US dollar yen will do a U-turn and start heading for higher levels. And that's why we're overall bullish, because if we get oil to break out above 80 and especially push it up to that $100 mark, then we're going to most likely see the US dollar yen pricing around that 116 level. So for you long-term bulls and long-term trend traders, waiting a week or two to see how this sell-off does or does not occur would be a good idea. And definitely if we get down towards this 109 to 109.75 area, if it holds, and then we get, say, another buy signal, like right here, we had a buy signal right here that set off this rally. This is a bearish engulfing line right here. This is a bullish engulfing line that set off the buy signal that sparked this whole move higher. Markets tend to go out like they come in, so it's not out of the realm of possibility that we do come and find support somewhere around here. Before it was resistance, now it will most likely become support to help confirm our trend idea that we're going to maintain a bullish trend, although that is not very severe. So we will have big spiking breakouts to the upside when we're riding the lower end of support, but then when we pierce resistance, it's like boom, we burst the bubble, and then we got to find just a higher move low and find our base once again and do it again. So it's a grind, looking for big dips to buy. Okay, now let's check out another part of this little area. Australian dollar, US dollar is definitely in a bear trend. Ironically, it has set a piercing line buy signal on Thursday after setting a higher move low and after making a lower move high, meaning this market is in neutral short run. It is not by any means a bullish. The fundamental economic factors for Australian dollar, US dollar are now so negative that we're looking at this as only a correction, which is probably being lifted and supported by the fact of dollar weakness. This is not an Australian dollar strength trade. This is a dollar weakness trade. But this piercing line is a high probable Japanese candlestick pattern. The highest we're looking for this to go up to would be up to challenge this downward sloping resistance line, which keeps the trend intact, which has been going on now for months. Only if we were to get above the 76.65 area will we even start to think that this market is not even bullish, just neutral against the dollar, or the dollar is that weak, because the Australian dollar right now with the price of oil going up, is getting a little bit of a support, but the fact that the country's in total lockdown and they can't even get their oil out, that doesn't help things, you know. So it's kind of a double negative when it comes to what's going on with that. So just be mindful of that trade. If for those of you that are Australian dollar, US dollar traders. Now we have someone who's got the euro. We got Greg Dog. You want the euro? I think you want the euro Australian dollar analysis, not just the euro or the Australian. So let's look at DAX 30. Yeah, we can do that too. We'll get to that though towards after we get to the cryptos. All right, but we can do the euro Australian since we've already talked about the euro. Is it showing a sign of a bounce? Well, it's only dollar weakness that would try and bounce the euro. Remember, we have a buy signal in the pound, and we don't have it in the euro. So let's take a look at this the euro AUD. So euro AUD right here. Okay, so this is interesting. Now I would assume that because the Australian dollar has had a little bit of strength, see how this has this high, this swing high right here. We came back off of this, and now we're getting ready to test this swing low here. Should this occur, you're looking at a head and shoulders pattern right here. Here's a shoulder, here's a head, here's a shoulder, and that would confirm weakness. Now, the fact that the euro right now, if it bounces versus the dollar, we're not looking for any real strong show of strength. Remember, the EU is energy dependent. They're having natural gas shortages. They're having issues with oil and with gasoline. Same within the UK. So the euro, but the UK is fine because they actually are an oil producer. The EU is not. So Australia is, and the fact that Australia right now is coming off of a higher move low, that gives it a little bit of strength versus the euro, and that's probably why the euro Australian dollar is poised to test these lows. And I would say look out if you fail from here. You have also a head and shoulders that is taken out. So here's your neckline, and here's your shoulder. Here's one shoulder right here. For those of you that aren't familiar with the head and shoulders, this is a classical technical analysis pattern that when it does occur, and especially if it's concurrent with other sell signals or buy signals when it's a reverse head and shoulders, it's a very useful tool for projecting market trends and as far as also market pricing as far as how far they're going to go. Okay, so we're looking for the euro AUD tomorrow or tonight and see how it opens up. If it fails from this area right here, then we are going to probably see a slide down to, let's see, where is the last big low. It's a big trend change. Let's go to 50% right there, and then we'll go to 0.618. So we're using the whole length of this big rally into this head and shoulders to see where we could go down to. All right, so somewhere in this area right here is where we're looking for the euro AUD, and as you can see, this was a consolidation area prior, so it's very likely that the euro AUD, and could see how that would happen, where this head and shoulders, if this is going to sell off and be true, that this is where you would find support, because Australian dollar has so many fundamentals going against it right now that the EU, even if it's bearish, Australian dollar is definitely much more bearish. And if the dollar is only in a corrective phase and then becomes a bull again, especially against the Australian dollar, it's going to hammer the Australian dollar much harder than it's going to hammer the EU. So that's something to be mindful. As far as swing trades and volatility, Australian dollar crosses, I mean, I can tell you right now, I'm in the pound Australian dollar, and we took a little heat over the past week and a half. I'm long the pound Australian dollar, and that's because I think there's more pound strength than there is Australian dollar strength, especially over the longer term. And anyhow, so that's one market right there also to look at when it comes to those crosses. Now let's get to the New Zealand dollar, US dollar, before we get into the Canada and the cryptos, the DAX. We can get to the DAX 30 as well. All right, New Zealand dollar also posted a 3 inside up buy signal right here. This is a high probable Japanese candlestick pattern. This market is kind of wedging into its bearish for trend. It's coming off a higher move low with this buy signal. So this low here from 2 sessions ago will be your base. If you're an aggressive bull, this is your line in the sand. If you are bearish right now, well, you're fighting right now a counter trend trade. So, however, because this market came off of a lower move high and now a higher move low, maybe if it's set up for neutral, it is a good situation where this is set up to at least get a little bang for your buck and challenge resistance. Probably not going to get that big of a rally out of this one, but it is a good chance of at least seeing higher price action over the next couple of sessions. Greg Dog, you are welcome. All right, now let's go to the US dollar Canada. Here's where we have a setup, guys. If you want to trade, look for a trade. This is interesting because it pulls everything together. You know, I get sometimes questions from some of our listeners like, why do you talk about all these other markets? Well, the best indicators for any market is the market. Remember, we were talking about, once again, in the beginning, interest rates. Interest rates right now are going lower. Bond prices, 10-year note prices are going up. Remember, you can get all this information from the Forex-trading-unlock.com website. When you go to the markets, go to futures, and then when you go to futures, you can see the 10-year, the 2-year, and we don't have the DAX on here, but I will pull up the DAX market. We will get to that. So you can pull up the 10-year and all these markets that we're talking about and looking at. Remember, crude oil, that's going higher as well. Canada, this is a big deal. So once again, interest rates are going down in the market right now, bearish the dollar. Crude oil is going higher. That is also bullish the Canadian dollar. Remember, that Canada is a producer of oil. They're also a producer of gold. So the fact that gold's going up and oil is going up right now, and there's a little bit of dollar weakness, that sets us up for another head and shoulders pattern. Remember, we talked about the head and shoulders pattern. For those of you that weren't familiar with it, now you are. Look at this head and shoulders. This is a big deal. The US dollar, Canadian dollar has been trending lower for months and months and months and months. It finally turned at the very beginning of the summertime, setting up for what is now a head and shoulders pattern as we ended the third quarter and are now in the beginning of the fourth quarter. Interestingly enough, this upward sloping support line that's been maintaining this correction to the upside intact has been tested a couple times last week, settling right on it. We have this neckline. This from this little right here from the shoulder. Here's a neck, and here's the other side of the neck. Here's your neckline extended. This is just below it here. Very key support, okay? And then we have this higher swing low right here. If we take that out, that means that we've confirmed taking out the neckline, taking out a lower move low after a lower move high, confirming what? A new potential downtrend that will be extended. And where is our downside target? Well, below $1.2487. We're looking for a lookout below 121.16. So right now we are in a sell rally forecast aggressively against the high set from 3 sessions ago here around $1.2781. Ultimate risk to the upside is this $1.2897 area. If we get above there, well, then this corrective move is obviously a bull. You know, I mean, it doesn't take a rocket scientist to figure that out. However, as far as a low risk selling into this area right now, using that as your risk, looking for a test of support due to the fact of what's going on with the interest rate market, the gold market, the crude oil market. This is giving us a good chance at testing support, and if we take out these levels, look out below. I would assume that you probably have a lot of sell stops going on there. More quality options, please. My phone keeps buffering. Okay, I'm not quite sure about the phone connection. Probably has to do with maybe you're mobile and you're also moving. I don't know. Right now I know we're broadcasting and we don't have anything else running except for the stream, so it should be a pretty strong signal, but I'll check the levels in a second after we get to the next market. Anyhow, so we have this, like I said, sell scenario. I would look for support to be tested early this evening, and I would not fight this trade. I wouldn't doubt that you see some swings because you have a Canadian number coming out tomorrow, but if you look at it even on the hourly, you have lower move lows, lower move highs. You're looking to test support. Okay, so the US dollar, Canada, and that helps to reinforce the selling off of the US dollar as well. All right, so we're going to do a couple of cryptocurrencies before we get to the DAX. because we have a bearish engulfing line sell signal that occurred back a little while ago on, what was it, September 7th in the Bitcoin market. Ironically enough, we came right down into the buy zone from that sell signal a couple weeks ago. We bounced off it, made a lower move high, higher move low, and then a higher move high. So we're looking to see how things go on the day today. Right now, as of yesterday, we have a short-term pause for the cause. If you're aggressive and looking to take profits right now and you're jittery, then I guess you might have, yesterday's or 2 days ago, the high may be it for the short run. So if you're aggressive short, use that high right there as your risk. And look for at least a little pullback and digestive back into this 46,000 to 44,000 area. As far as a correction back all the way down to where we found this area before, we already hit the profit target here for this sell signal. Could it go lower? Absolutely, it certainly could. Now, it would have to take out this low from September 21st here at 39,585 to be really bearish. The reason being is that we made a higher move low here on September 21st. We could just be building a base before we make a screaming new high to 54,000, 60,000, who knows where we're going. So the overall trend for the industry, for crypto, which the BTC, I always say, is kind of like the dollar index. As far as some of the technologies, we'll look at what's going on, and I think that you're likely to see more digestion going on right now. And I would not say that I am bearish the BTC right now, US dollar, but I'm not very bullish, and you'll see why when we get into a couple examples. But right now, as far as a signal, we do have a short-term pause for the cause as of yesterday's trading. We'll see, especially today, you got to realize Sunday's trading isn't over with. So for the third, if we end up going negative today, that's a big deal. If we end up closing negative on the session for BTC USD rolling into Monday's trade, then we have a potential 3 inside down sell setup happening. So I'm going to put a little arrow here. We have a potential sell signal forming. Now, you know what that means when you say potential? It means it's potential. It doesn't mean that it has happened yet. Okay? So do not get in front of the sell signal. Okay? That is very big. So I can't stress it enough that when it's forming, it's just an illusion. You don't know what's going on. Now, right now, it's positive on the day, so that doesn't make us want to take this sell signal at all. Could you be getting a better selling price? Should it end up lower on the day right now? Well, of course you could, but that doesn't mean that you would be right, because right now you could be selling into what could be an explosive rally that builds over the next couple of hours, making higher move highs. For all we know, Bitcoin can be at $52,000 within the next couple minutes, let alone the next couple of hours. So let's see what happens on the settlement of today and the rolling over into Monday's trade for Bitcoin US dollar. We are looking for a sell signal to emerge and be confirmed with that. So if we do have a lower close today, that would confirm a short-term change in trend, a pause, not necessarily an overall bearish signal for the trend, but for at least the next couple days, maybe a week, see lower trading prices. All right, ETH USD. Let's look at the ETH USD. Or actually, you know what? Let's go to Doge. I'm sorry, first. Doge US dollar. All right, so the Doge US dollar, this one is definitely sliding lower with lower swing highs and lower swing lows. It had the pause for the cause off of the bounce yesterday as well. Kind of neutral today, looking a lot like Bitcoin, only it's been trending lower. And that's where I think the whole industry as a whole right now is just kind of dragging, and that's holding, not everyone, but a lot of them are, and that's holding Bitcoin back. Dogecoin, looking for a reason to buy. I'm looking more for a reason to sell, because I took payment in the 34 to 40 cent area, so I'm looking for it to take a little profit once it gets to back up in this 36 to 40 cents area, 50 cents. So I don't know. Right now, I would say this one is a dog with fleas. I would look to buy into dips then rather than to sell into rallies, because as far as rallies, how much of a bounce are you going to get? If we do have a little bit of a slide in Bitcoin and Ethereum and stuff like that, I would wait for them to get a valid buy signal for a bounce before looking to buy a bounce in Dogecoin, which then seems to get an initial run up before then it falls apart. Another one that you need to look at right now is the Monaro US Dollar. This one is showing a little bit of strength, pushing those highs, but look at how it's been coming off of lower move lows and lower move highs, trending a little different than the broad base of cryptos, especially Ethereum and some of the other bigger names. This one we are liking at its price point. I've been saying constantly, like between 180 and 220. It's a buy up to about 340 to 400. Once you get above this 340 area, it starts to get a little pricey for the technology, at least in the short run. I do like the sustainability of it, and I love the sustainability with it being a range trade between 180 and 300. So I'm long it. I'm looking to take some more profit again around the $340 if it gets above that level, and then wait for another swing back down to the downside. Now let's look at ETH USD, because on the dollar, on the daily basis, it's looking like it wants to go for a little breakout to the upside. But we have a bearish engulfing line sell signal on the hourly, which has us looking like we might want to test support. We don't know, so it's very key to see. Right now, I would just use caution. Should we get below 33.72, especially 33.43, we'll be leaning on this upward sloping line, maintaining the hourly trend intact. As far as on a daily basis, this is also going to make things a little bit hard. I would think that it's possible you're going to see a little bit of a sell-off here in Ethereum, which is no big deal. Get it back down to 3250, 3200, and then get a bounce back and come back to where it's at. As far as pricing, I like this thing anything below 3000. Once you get above 3500, going towards 4000, I think you're getting a little ahead of yourself right now in the short run. And especially if we do take out support first without making another high here above 3,471, then that is kind of bearish in the short run, looking for a longer term digestive period. So we'll see how that goes. All right, now let's return to ETH US dollar. Oops, we're not ETH US dollar. I want EUR US dollar, Euro US dollar. Okay, we started with the Euro US dollar. Now let's go to the DAX. Okay, so we got the DAX here for you. This is for Rafter Mano. All right, DAX 30. All right, so we have the DAX index here. As far as, let's see, this doesn't have any, yeah, I don't have any of the pre-market information on that because it's not up yet. Let me see. Check out the DAX futures real quick. Okay. Okay, and now let's go back to the DAX index. All right, so as far as DAX index, let's go to the monthly. Big monthly sell signal here for you, my friend. And this is something that's going on with equities across the board. All right, so what do we have here? We have a bearish engulfing line sell signal on the monthly. So as of September, this market has already started its sell-off and its slide. That means that it most likely is capped out back here in August. That's right. As far as the DAX is concerned, this market capped out and is looking for a retracement at least. Look for a 50% retracement down to there and then there. So between the slowdown in the economy, delays, shortages, etc. for the EU, try DAX 40. It's recently changed. That's right, the DAX 40. That's right. DAX 40. Here you go. How's this one? Same difference. All right. So DAX 40, we have a bearish engulfing line sell signal, and we have the high that was set 2 months ago back in August, and right now September or October we're starting off already in a lower way. So as far as, once again, we're looking for a correction at least to the 50% marker. And this, the main reason for this is that I think that while we have the short-term break in interest rates for the United States, that's only what it is. It's short-term. It's not going to last. It's eventually the market rate, no matter what the Fed does, is going to command higher rates, making the dollar stronger. But that's over the next week or so, especially as oil is breaking out to the upside, gold's going out to the upside, and we have these currencies in flux, I can see follow through to the downside with the DAX. So as far as where are we looking to go, I would say longer term, that between now and okay, if on a longer term basis, this would be our extreme that you could see us targeting back. What would bring us down there? Well, hey, look what happened back here in 2020 when we had the pandemic. If these numbers start to really, I mean, that pandemic happened because we had a forced shutdown. Now you have delays in businesses being destroyed globally that I don't know to what extent it's happening in the EU, but I can tell you what's going on locally in the Chicagoland. So if it's any reflection of what's going on in the world, I could see the DAX where this may have topped out. This may be done. We have, when it comes to looking at markets like this, let's go to here. We go back to forex-trading-unlocked.com, go to markets, go to futures. Since we're looking at the DAX 40, we're going to compare it to something that's going on relative. If you want to know what's going on with the DAX, you also have to know what's going on with the S&P 500, which is a pit that I was in for over 21 years. The S&P 500 on a daily basis, as you can see, has been trending lower. They had a nice big buy day on Friday. I would say that was just very fortunate profit taking that was going on. You have, because of the price of oil escalating, all your oil stocks have been escalating to the big day in a big way. However, volume not so much spiking to really justify a real true bounce. I think what you have, no matter what, is a lower move low being established after a lower move high, and we're still going to be looking to make a lower move swing high and then continue lower. So I believe that's pretty much what's happening with that. The scenario also, if you look at, once again, I forgot to tell you, is with where do we go? With the S&P 500 contract right here. If you go back to the crash of '87, that was 34 years ago. We are now on the 34-year cycle, which is a Fibonacci cycle of that date when the market capped out and we had markets around the world selling off. Well, S&P started selling off on September the 3rd, and we are still in a bearish way. If you look at the DAX, they started selling off in August. So let's go to the weekly. You can see back here, this is August 9th. You can see this is where the market had capped. Also, check this out. See how this all starts when you look at the long term and then you start seeing where you're at in the short run. It all starts to really make a lot of sense. So here's the weekly. You can see where we're coming off. This is from back in March of 2020 from the pandemic when the bounce happened for the DAX. Kept making higher move highs, higher swing lows. We took this out back on August 16th. Okay, so already a month and a half ago, we already took out this little area. Now we have the daily where you can see where it came through, and now we are where we're at. You know, so as far as how far can we go down, once again, I think you have to go all the way towards this area here. Looking at the long term, this is where we could go. Short run, obviously, not so much as big of a correction. However, I think that we are in the beginning of, if this is the case, where it is a true 34-year cycle for the stock market in the United States and as well as across the board, we're looking at the beginning of a major sell-off that will keep on going for the next, upwards of 3 years, probably. You know, so for us to continue lower and think about that one, let's see. With the current administration in the United States, we are in 21. We need to get through 22. We got to get all the way to, well, we got to get a lot further out. Let's go on the monthly. All right, so we have 21, so we got to get to 25. January 25. All right, so somewhere between here and October of 2024, somewhere in this little range here, you're probably going to see this market continue to trend lower for the next 3 to 5 years. That's a pretty big call. Doesn't mean it's going to happen. Doesn't mean everything's going to get all rosy and whatever. But with the oil going up and all kinds of other things going on globally at the rate that they're accelerating as well, if the brakes don't get put on and things don't start to go back to common sense, we're spiraling towards this is where the market's going to go. So there's reasons why the U.S. markets may hold up a little bit better than the European markets, but I think the DAX is definitely set to get really, really crushed over the next probably, the fact is the supply chain too. You're not even getting stuff sold here in the United States. So if you can't even deliver German parts to the United States, that's a problem, for the EU, as far as even whether you're going to be getting them, how you're going to get them here. So these are all issues that you got to think about. So as far as any other questions, let's see, we have these questions on Twitch. This is really cool. Really like that you guys are doing this. Make sure you like our thing on Twitch and YouTube, and make sure you share the video with people. Leave some comments in the sections as well. If you haven't followed our stuff, make sure you do. Let's see, we have answered the question about the DAX 30, or actually no, DAX 40. And we did the Euro AUD analysis, got all your questions. Let me see on YouTube. Let me just put this out. Any questions? All right. And then now on Twitch. Any questions? So crypto, different currency crosses, any other market questions? Because if not, then we have something we can take a look at. So we go back to our hourly sell signal here with the ETH USD. So this one here is probably one of our most interesting trades of the afternoon to follow, because right now there's a Bears game that I haven't even checked to see whether or not they are winning or losing, because I have to see what's going to happen for the second half and have some lunch and watch my home team get demolished. But what can you do? Hopefully they don't. They're playing Detroit Lions, but you never know. So, in fact, just to give you guys an update, what's going on? The Bears are winning 7-0 against Detroit at home with 2 minutes and 57 seconds left in the first quarter. Okay, that's great. All right, so we're right on track here. So we don't have any more questions. So for those of you that want to know what to watch for this afternoon before the markets open, remember, let's go through one quick lap around the world with all the trades to pay attention to for the week ahead. So real quick, real brief, just a reminder, look for 30-year and Treasury bond prices to continue higher, making rates a little bit lower, giving pressure to the dollar. If the 30-year and 10-year turn around and end up coming lower, especially if they make lower move lows on the week or on whatever, the dollar is going to gain strength. So be very careful. The dollar bulls will come out in fierce ways. Crude oil. This is most likely going to be buffering higher move highs, especially if it gets above 80. Expect things to get very volatile in the market. Gold, we're still looking for a follow through to the upside. This is another thing that is limiting the dollar mobility to the upside. So we're going to go back to here, and we go to Dixie. Remember, dollar index. 3 inside down sell signal, short-term correction, looking for a counter trend trade. Remember, the dollar index is a longer-term bull. All kinds of reasons to buy this market, but every reason to see a little profit taking and look for a dip. Probably not as extreme as this extended target is here. The Euro US dollar, remember, biggest component of the euro of the dollar index. We're just saying, hey, it's a low risk buy here because the dollar index is looking for a pause for the cause. Does that mean we're looking for this to get this high? Remember, we said there's all kinds of reasons that would probably limit it going here, just like the dollar index not getting to where the extended target is. Downward sloping resistance line here, 17 even to $1.17.5 extreme. British pound US dollar, however, this is where we're looking for a little bounce of strength, especially with the oil markets being positive and looking for a run at $80 or higher. Should we get something like that compounded by a rally in the 10-year and 30-year Treasury note futures, this will help to get us right up to this $1.38.32 area. I believe you're going to have a lot of trouble here, but just because we get above here, it doesn't make the pound US dollar a major bull, but it's very likely that the pound US dollar is going to have a big sideways action for the next couple of years, where the dollar right now in the short run can have an edge on it, but I think the pound will have a good reason to get its bounces, and the pound is going to be very strong versus many currencies globally, except for the dollar, for the next couple of years also. That's a big thing to keep into consideration. Excuse me, my mouth is getting dry now. Time to end this video pretty soon. US dollar Swiss coming off a short-term swing high. Remember, this is another one we're looking for maybe a short-term correction. We are not overly bearish at all, that's for sure. Okay, US dollar JPY, this is another one we're looking for this correction to continue. Extreme, this would be this area down here, this 109.21 to 109.75. Odds are it's not going to get all the way down there. Probably 110.5 down to 110 even. I would use caution. It's probably going to get dicey and slow and take a lot of grind like this little area here. It could bounce around for a month in a $1 range, just going chop, 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 just like it did all in here. Okay, so be very mindful of that. And also just remember that the sell signal, it is activated, and the high right now from 2 sessions ago is your risk level. Anything above here, the bulls are out in full fashion. US dollar strength prevails. You're on the wrong side if you're short. Short-term piercing line buy signal here for the Australian dollar, US dollar, looking for another little lift. We'll see how this goes. Remember, we're not overly bullish. We think the fundamental and other economic factors are going to keep the Australian dollar suppressed versus most currencies, especially the US dollar. But right now, with the current lift in gold prices and oil prices, that's helping the Australian dollar, even though they can't get anything off of the continent, believe it or not. New Zealand dollar, US dollar. Okay, we have this one is pretty much doing the same thing as the Aussie. They don't have quite the issues that they do in Australia. However, they're not too far away. They're just not as China weighted. We're looking for this bounce here to be confirmed, or to follow through rather. This is a 3 inside up just pattern, just like we had in a couple other signals or markets where it was signaled, the same kind of signal from the high probable Japanese candlestick pattern book, by the way. But yes, we are looking for a rally, a little follow through over the next couple sessions to a week. Not any major upside action. US dollar Canada, that was the big one that we were talking about, looking for this to buffer support. If it takes these levels out, look out below, brother. It is going to tank most likely, with the strong price in oil and the pulling back in interest rates, etc. Along the bullish gold market. These are all things to become strong for Canadian dollar versus not just the US dollar versus many crosses, period. So the dollar versus the Canadian dollar is likely to take out this downward sloping resistance line that it's settled on, take out this neckline from the head and shoulders, which will have it leaning on this $24.87. A failure from there confirms lower move lows after lower move highs, and an intent for a new bearish trend to come back and test these major lows here around $21.16. So a lot of potential to the downside here. Very low risk sell side position here for US dollar Canada. If you're trying to buy into this, I would say anywhere from below $24.87, you're just gonna get hammered. So just be very careful when it comes to that. All right. So for all of you that have been paying attention, we're going to show you one last thing before we end our stream. So we add this Eth USD, we have this hourly sell signal. So we'll see how this works for the rest of the session. We are going to, or the rest of the trading day before the currencies come online, we will continue our live, we're going to cancel our live stream for a couple minutes, and then we will rebroadcast with this hourly sell signal in place, and we will see how things go until we have to come back with another webinar for later on. So I want to thank all of you for participating in the webinar today on the chat room. That was fantastic of you guys to have questions and ask about different markets. You know, we can ask about any market you want. We'll take a look at it if we can. So, and if you have not done so, remember to check out our book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And don't forget to make sure to subscribe to Forex Trading Unlocked on YouTube and Twitch. We will have our cryptocurrency, Ether, US dollar, sell signal hourly trade up for you